Time for Hot Picks. Our next guest has 3 stock names for a strong and profitable Team Canada portfolio. Joining us is Julian Klymochko, CEO and Chief Investment Officer at Accelerate. Thanks for being with us, Julian. And I guess for a stock market in Canada that is already at an all-time high, what goes into building a Team Canada portfolio, in your opinion?
Hello, John. Thanks for having me on the show. Today, I wanted to chat about a theme, True North, strong and profitable. So we're talking about elbows up investing in Canada's best stocks. Now, over the past several months, there's been this ongoing trade war, threats to our sovereignty in Canada, and a real Buy Canadian initiative by Canadian consumers. Now, for patriotic Canadian investors wanting the same for their portfolio, I wanted to chat about 3 MVPs of the Canadian stock market that they consider if wanting to bring their money back up north, sell some US stocks, and invest in some of the best Canadian stocks in the market.
All right, well, let's go through 3 examples that you brought to the table today, starting with Constellation Software. I know we live in a world where we talk endlessly about NVIDIA and Tesla, but when it comes to tech stories over the long term, Constellation is quite a standout. What is it about this business that makes your MVP list?
Yeah, it's a great question. And Constellation really has been the stock to own over the past 20 years. The best name on the TSX, just exceptional shareholder growth, has grown to $100 billion in market cap. Pales in comparison to NVIDIA's $4 trillion. In any event, the 10th largest name on the TSX these days. And it's simple. They acquire highly profitable, mission-critical vertical market software businesses, and they're exceptionally good at it. They've done this for the long term, and they've been able to compound shareholder growth and compound earnings per share double digits for several decades in a row. And we expect that to continue going forward. So if you're invested in the Mag 7 and you want that technology exposure in Canada, Constellation Software is the way to do it.
Okay, now moving from a well-known name in the technology landscape in Canada to a well-known name in the financial services sector, arguably the insurance arena, and I guess gets often compared to companies like Berkshire Hathaway, is Fairfax Financial. What is it about the Fairfax story that catches your eye?
Well, John, with the announced retirement of Warren Buffett and investors, I mean, many own Berkshire Hathaway and have for a very long time, which has been one of the greatest stock market stories in history. They have the opportunity to repatriate their funds, invest in Fairfax, also known as Berkshire of the North, with Prem Watsa, who has what seems like a lot of years left in them of both exceptional insurance underwriting combined with great investment portfolio returns. And the combination of those two, a phenomenal insurance business and just top-notch investing acumen, has produced tremendous shareholder returns, and we expect that to continue. And with respect to Fairfax, it's still at a pretty attractive valuation here. And they have several of the attributes we like to see: rising earnings estimates, strong share price momentum, a declining share count as they buy back shares, beating quarterly earnings expectations, and that fairly attractive valuation based on book value.
Okay, and then the third name that you wanted to flag today is obviously well known to Canadians, whether they are investors or shoppers. It's Dollarama, and it's worth pointing out that while it hasn't seen the same return as, say, Constellation Software over the last decade, it is a definite standout, easily outpacing the TSX itself over the last 10 years. And given that run-up, what is it that you still like about the Dollarama story?
Yes, John, the thing about MVP stocks is they tend to keep going up and up and up over time, and that continues to be the case with Dollarama. What they've done is created really the guerrilla of dollar retailing in Canada, and they're expanding that model globally. So they've created just a defensive growth gem with strong margins, resilient sales. This is really a non-cyclical business. If we do hit a recession, it can continue to do well, and meaningful upside expansion opportunities, not only domestically, but internationally as well. So they're growing earnings double digits, growing revenue single digits. And I'm advocating for those Canadian investors that are fans of, the Walmarts and the Costcos in the US. You can bring your funds up north and back a Canadian winner in Dollarama.
Interesting. So what are your own expectations with these companies if you think long-term winners can continue to be winners and you're thinking about adding these to a portfolio, Julian, what is your own investing philosophy there, time horizon? You're adding these to the portfolio and keeping them there for the foreseeable future? Is that kind of the plan?
That's exactly it, John. So with these long-term share price compounders, they're the winners that are going to keep winning 5 to 10 years from now. So I'm advocating for long-term holds in these names. They're the real MVPs of the Canadian stock market and can be staples of a Canadian investor's portfolio for the next 5, 10, 20 years.
Okay.